The official approval of the XRP Exchange-Traded Fund, also known as an ETF, has just taken place, and it has just caused the financial world to be rattled for the very first time. This is the most explosive development in the history of digital assets. After years of regulatory uncertainty, court battles, and speculation, the Securities and Exchange Commission, SEC, has now issued the go-ahead decision that will dramatically transform everything. This decision will completely revolutionize everything. For the very first time, institutional investors, like as pension funds and hedge funds, have been able to acquire direct exposure to XRP thanks to an exchange-traded fund that is completely regulated. This is a significant development. In addition to being a major cryptographic mark, this is not just another one. This is something that Ripple and the XRP community have been waiting for in order to get the mainstream validation that they needed. As a consequence of this, a flood of capital is being released, which has the potential to influence the global financial system in a manner that is different from what we are accustomed to. Large financial firms like BlackRock, Fidelity, and Vanguard have been putting in a lot of effort behind closed doors in order to prepare themselves ready for this precise moment. Throughout the course of several months, disclosures and filings from insiders provided the impression that these businesses were secretly amassing positions in anticipation of regulatory clarification. They have reached a point where they are ready to proceed with the implementation of the ETF. The XRP ecosystem is believed to be worth billions of dollars. And we are talking about a capital flow that is waiting to enter the ecosystem because it is waiting to enter. Analysts are already referring to this as the most significant institutional on-ramp since the original acceptance of Bitcoin's exchange-traded fund. This can be seen as a big development. On the other hand, in contrast to Bitcoin, XRP is not only an asset that is acquired through speculation. In addition to being built with the infrastructure of global payments in mind, it was developed with utility in mind, created with settlement in mind, and constructed with settlement in mind. The potential benefits of XRP are substantially more substantial due to the fact that this distinction is precisely what makes them so. Give some consideration to it. Furthermore, XRP was already working as a bridge currency for international settlements, which made it possible for huge financial institutions all over the world to carry out transfers that were extremely rapid and cost nearly nothing out of pocket. Traditional finance, also referred to as old money, pension systems, and sovereign wealth funds are now able to participate in the cryptocurrency market now that the exchange-traded fund has been developed. This means that they no longer need to communicate with cryptocurrency exchanges or private wallets. The analysts are referring to this occurrence as a liquidity movement of $2 trillion, and it opens the floodgates for it to occur. Furthermore, this is not a hypothetical circumstance, rather it is a representation of the reallocation of global capital from traditional asset classes into programmable digital liquidity, and XRP itself is situated smack dab in the heart of this process. Honestly, the implications are so far beyond comprehension that they are incomprehensible. In addition to the set supply of 100 billion XRP tokens, a sizable percentage of that supply is still held in escrow by Ripple, which occurs on a monthly basis. The amount of the total supply that is currently available for trading on open marketplaces is only a small part of the whole. According to this, there will be competition for a float that is continuously getting more rare, and fresh ETF demand will be competing for it. The kind of supply shock that is fairly unique in the annals of financial history is going to take place, and it will be brought about by the fact that daily trading volumes are likely to be overwhelmed by institutional inflows. This will be the cause of the supply shock from the historical perspective. When there is a surge in demand but supply is low, there is a violent and rapid change in prices, which occurs when there is a combination of both factors. Due to the fact that it involves fundamental economics on a scale that spans several trillions of dollars, big analysts and insiders are whispering a number that was previously thought to be impossible. This is because the scope of the problem spans many trillions of dollars. There is a possibility that the price of XRP will hit $300 before the end of the year. When the first Bitcoin exchange-traded fund was established, the prices of Bitcoin skyrocketed to record highs as a result of institutional buying. It is important to keep in mind that this was for an asset that never had any real-world applications other than serving as a store of wealth. This is not a matter of pure speculation. Simply have a look at what happened with Bitcoin before continuing. Now, on the other hand, XRP is serving as the basis for a live payment system that has been effectively adopted by businesses, governments, and financial institutions. This is a significant development. It serves as an excellent illustration, as it is comparable to the plumbing of the future financial network. For the purpose of illustrating this idea, let us hypothetically assume that the same institutional demand is now combined with value based on utility. The aforementioned statement is not merely empty rhetoric, rather it is a strategy for determining pricing at an exponential rate. The Exchange-Traded Fund, or ETF, has reportedly been the subject of secret negotiations with significant custodians and asset managers. The purpose of these negotiations is to ensure that deep liquidity pools are ready to support the ETF. The information in question has been making its way around behind the scenes. There are rumors that the iShares XRP Trust, which is owned by BlackRock, the blockchain business of Fidelity Digital Assets, and even the blockchain division of Goldman Sachs, are all members of a syndicate that is getting ready to tokenize and settle portions of the ETF directly through the XRP ledger. This is a syndicate that is getting ready to tokenize and settle portions of the portfolio. In the event that this is the case, it would suggest that the most prominent financial institutions in the world are no longer merely purchasing XRP. Rather, they are in the process of building on it, which is the most definitive evidence of a commitment to the long term. With that being said, there is an extra component to this narrative, and that is the regulatory turnaround. It is possible that the decision to allow the exchange-traded fund represents a substantial shift in the SEC's position toward XRP. Following a period of time during which it was classified as an unregistered security, the permission effectively suggests that XRP is now being acknowledged as a digital commodity or possibly a payment token. After many years of being classified in this manner, this acknowledgement finally comes. Regulatory clarification is the missing element that institutions have been searching for, and they have been expecting for it. By doing so, it removes the final barrier that is preventing general acceptance from occurring. As of right now, all financial institutions, remittance businesses, and payment processors that were previously hesitant to include XRP into their infrastructure are now able to do so with full confidence. XRP has been turned from a potentially harmful cryptocurrency into a valid asset class that can be invested in as a result of this legal clarification. Do you think it would be appropriate for us to ignore the larger-scale economic context? Inflation is lowering the value of fiat currency. Traditional safe havens are coming under increasing levels of pressure, and global debt is reaching historic highs. All of these factors are contributing to the decline in inflation.